Wires and cables manufacturer Polycab India saw highest ever top-line growth in Q3 FY22, riding on demand upswing in domestic economy. Polycabs witnessed a 23% year-on-year growth in revenue for the December quarter. The strong revenue growth was underpinned by rising demand across retail and institutional segments. However, raw material inflation, supply chain issues and volatility in input costs led to erosion in operating margins. However, calibrated price hikes and better operating leverage led to sequential improvement in operating margins. EBITDA was largely unchanged during the quarter as margins contracted by almost 200 basis points to 10.7%. On a segmental basis, wires and cable segment sustained its growth trajectory on the back of favorable market environment. Segment revenue jumped 24% year-on-year, primarily driven by a healthy offtake in the cables business. Robust pickup in the private capex led to improvement in cable volumes. In contrast, performance of the wires business was relatively subdued owing to volatility in copper prices and renewed fears of lockdown in November-December. Exports business declined 8% on a high base. Adjusting for that, overall growth stood at 24% and was driven by robust offtake across all geographies, the US, Australia as well as Asia. Retail-focused fast-moving electrical goods benefited from positive consumer sentiment around the festive season. However, Q3 growth moderated to 11% as the surge of the Omicron variant led to weak sales in the month of December. While the fans business was subdued for a second consecutive quarter, overall performance was quite healthy on account of market share gains across other product categories. Quarterly margins for the FMEG segment continue to remain very volatile due to expansion of distribution network and higher ad spends. Resumption in project activity meanwhile translated into better revenue for the EPC business, which came in at 75 crores, up 21% YOY. EBIT margins for the quarter came in at 14.3%, but the medium-term margin guidance is anticipated to be slightly lower in the range of 8 to 9%. Polycab is seeing inflation across the board, including materials and packaging and even transportation. Operating leverage, price hikes and premiumization have helped ease some of the cost headwinds, but the management has indicated that near-term pressure on margins is expected to persist due to delay in passing on the steep hike in cost. Upswing in real estate, infrastructure and manufacturing have been aiding Polycab's growth in the institutional pockets meanwhile. In fact, the contours of demand continue to broaden as the private capex cycle is finally showing green shoots after a very long time. Inflation and third wave have hampered demand momentum on the retail front, but management expects growth to resume from February as pickup in new launches and rural outreach programs continue to take shape. Now, over the medium term, the company is eyeing a turnover of 20,000 crores by FY26 and is strengthening its management to scale up a host of verticals that it operates in. The balance sheet is healthy and the company had a net cash of 674 crores at the end of December quarter. Meanwhile, working capital swelled up to 82 days as inventory at the company level is higher than usual on account of two factors. First, the dealer offtake was lower in December due to the resurgence in COVID cases. Second, the company is holding higher inventory to mitigate any supply chain bottlenecks arising because of Omicron. Polycab's growth outlook, meanwhile, is supported by higher government spending and positive consumer sentiment. The business is on track to consolidate its market leadership in the consumer durables industry and is well positioned to navigate any significant demand headwinds in the near term owing to stable cash flows and a rich balance sheet. Polycab India has been our top conviction pick from the consumer durable space for a very long time. The stock has clearly outperformed the market as well as its peers in the last 12 months and is now valued at 31 times of FY23 earnings. A major part of stock re-rating has already played out, but the prevailing market cap of Polycab, which is around 37,000 odd crores, is relatively small in the context of the overall opportunity size in the consumer durable and electrical industry. Investors can therefore look to add Polycab on corrections as the company's growth outlook is not yet priced in and the stock offers further scope for capital appreciation over the medium to long term.